The stock market wasn't invented to make you rich. It was built to stop empires from collapsing. This is the story of the world's first formal stock exchange. It was born from fear, not greed, in the year 1531. We'll trace how risk nearly destroyed global trade. But how could one collapsing ship threaten an entire empire? The Age of Discovery opened vast new trade routes across the seas. Spices, silk, and silver promised fortunes beyond imagination. But every voyage was a gamble against death and disaster. Pirates lurked along the routes, hunting for rich cargo. A single shipwreck could ruin a merchant overnight. Merchants faced an impossible choice: risk everything or stay ashore. One family fortune could vanish beneath a single storm at sea. The problem was clear. Too much risk rested on too few shoulders. What if the danger could be shared among many instead of one? This simple idea would reshape the future of global commerce. In Antwerp, a bustling port city, that idea found fertile ground. Antwerp had become the beating heart of European trade. Goods from across the world flowed through its crowded streets. Traders from every nation gathered here to strike deals. The city needed a single place to organize this endless activity. So in 1531, Antwerp opened a building unlike any before it. It was a permanent place built purely for trading and finance. Above its entrance stood words welcoming traders of all nations. Here, no single merchant had to bear a voyage alone. Instead, they could sell shares in a ship's dangerous journey. Each investor bought a small piece of the risk and reward. If one ship sank, no single fortune sank with it. The loss was spread thin across dozens of willing hands. This shared risk made bold voyages finally possible again. Traders now dealt not just in goods, but in promises. These promises could be bought and sold like goods themselves. A share in a voyage became a tradable object with real value. Bills of exchange let traders move money without carrying coins. This paper money reduced the danger of theft on long roads. Loans and debts were now openly traded on the exchange floor. Interest rates were set here, shaping the cost of borrowing. Governments themselves came to Antwerp to raise urgent funds. Kings borrowed vast sums to pay for wars and armies. The exchange had become a lifeline for entire nations. Its influence now stretched far beyond the ships at sea. But this new power carried hidden dangers of its own. When trust wavered, panic could sweep across the trading floor. A single rumor of a lost fleet could send prices crashing. Fortunes rose and fell in mere hours on the exchange floor. Speculation was born as men bet on prices yet to come. The dream of shared safety now bred a new kind of greed. Yet Antwerp's golden age would not last forever. War and religious conflict soon tore through the region. In 1585, Spanish forces sacked and blockaded the great port. The lifeblood of trade drained slowly from Antwerp's veins. As Antwerp faltered, its merchants fled north to safer harbors. Amsterdam welcomed these exiles and their priceless knowledge of trade. In 1602, the Dutch built an even bolder new institution. The Dutch East India Company issued the first true public shares. Now, anyone with coins could own a piece of distant trade. These shares could be freely traded long after they were bought. The Amsterdam Exchange became the beating heart of world finance. Ships from across the globe fed its endless hunger for goods. Fortunes built in Antwerp now flowed through Amsterdam's canals. The idea born in Antwerp had survived, reborn stronger than before. Amsterdam's new exchange building opened its doors in 1611, grand and purpose-built. Beneath its arches, Traders gathered daily to buy and sell company shares. For the first time, prices of shares were tracked and openly published. Clever traders soon learned to bet against shares they did not own. This short selling could crash prices and enrage honest investors. In 1610, Dutch authorities banned this risky practice for the first time. Yet the ban failed, and speculation only grew bolder each year. The Dutch company grew into a vast empire of ships and colonies. Its wealth funded forts, armies, and trade routes across distant seas. Investors received regular dividends, sharing in profits from far-off lands. But the Dutch model would not stay contained within Amsterdam's borders for long. Rival nations watched with envy and rushed to copy the powerful new system. In England, London merchants dreamed of building their own great exchange. The Royal Exchange rose to challenge Amsterdam's grip on world trade. Coffee houses soon buzzed as informal markets where deals were struck over steaming cups. From these smoky rooms, the London Stock Exchange would one day be born. The hunger for shares spread like fire across Europe's wealthy capitals. With this fever came reckless dreams of instant, effortless riches. Bubbles began to swell as prices climbed far beyond all reason. The stage was set for history's first great financial manias. In France, a Scottish gambler named John Law captured the ear of a desperate crown. He promised to erase the nation's debts with paper money and shining new shares. His Mississippi Company promised untold riches from the wild lands of the New World. Crowds flooded the streets of Paris, desperate to buy a single precious share. Prices soared to dizzying heights as ordinary people became paper millionaires overnight. But the promised gold of the Mississippi was a mirage that never appeared. When doubt struck, panic spread, and everyone rushed to sell at once. The bubble burst, wiping out fortunes and shattering France's trust in paper money. Across the Channel, England fell for its own dream, the South Sea Company. Its shares climbed impossibly high, fueled by rumor, greed, and reckless promises. When the South Sea bubble burst, England reeled from its worst financial disaster yet. Yet these crashes did not end the market. They only revealed its deeper purpose. To understand it, we must return to where it all began. Antwerp, 1531. Here lay a quiet loophole that would rewire the entire world economy. Antwerp let merchants trade paper claims on cargo instead of the cargo itself. A debt or share could be sold to a total stranger, endlessly passing on risk. No one needed to meet, trust, or even know the person on the other side. Risk itself became a product, bought and sold like any other good. This simple trick let empires pool fortunes and fund voyages across the globe. From that quiet loophole in Antwerp grew the vast financial world we live in today.